Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone. Hope you guys got some great upcoming plans. It is July 31st. It just seems, when I say that, how fast summer keeps going by. It doesn't seem like winter goes by as fast as summer. But in any case, let's jump ahead here. We got quite a bit of data to go over on the economic calendar. We actually got 2 pages. So we'll start off the first page with consumer spending for the month of June. So back in May, you saw a pretty big spike in spending at 8.2%. Forecasts were calling for a bit of a slowdown at 5.5%, but it was still up 5.6%. These are still very good numbers that people are spending out there. Now we got the real inflation. This is where you take out the food and energy from the personal consumption expenditure, or it's also known as PCE for short. When you take out, that gives you the core PCE, and this is the Fed's favorite gauge for inflation. This is why it's very important for us to watch. We went from 0.1% increase in the month of May, 2% forecast, and it came in expectations at 0.2% in June. Year over year actually dropped. It went from 1% down to 0.9%. So this is something definitely we want to watch. We want to make sure that we don't go into deflation because that would be a very good thing here. So that's something we'll keep our eyes on. Employment cost index for the Q2, we had it was at 0.8% in the first quarter increase. However, Q2 was forecast to go lower at 0.6%, and it did come in a little bit lower than that at 0.5% increase for employment costs. So let's jump ahead to the second page, personal income now. Now here's where we see some stuff. Of course, we never like seeing people losing money. So in May, people lost 4.2% of personal income. A lot of that, of course, is the lockdown and unemployment and stuff like that. People losing and probably cutbacks and people uh, slashing their income a little bit in order to try to remain employed. Forecast was count for 0.5%, and it came in a little larger than that of a drop of 1.1% in June here. Now, some good news here. Chicago PMI, this is manufacturing in the Chicago region. In June, it was pretty bad. It was down to 36.6. Forecast count for a slight uptick to 43.9, and it jumped all the way up to 51.9. Now, this is important primarily because on this index, anything above 50 is considered expansion. Anything below 50 is contraction. So we were in contraction. It was supposed to forecast to remain in contraction. However, it jumped into expansion territory, and it just took off in the Chicago region. That's very good news for our manufacturing. And, and last but not least, we got the consumer sentiment for the month of July. We see that's ticked down a little bit. So we had a 73.2 in June. 73 was a forecast, so it's kind of in the same range, and it dropped a little bit further down in July. The final number came in at 72.5. We usually get a couple of these reports here, but the final number is 72.5 for the month of July. So let's take a look here at the headline news. Stocks are mixed today. Again, Dow and S&P are uh, struggling a bit. They're both in negative territory again, whereas Nasdaq, the technology stocks are just kind of tearing it right now. So we had the big guys, Apple, Facebook, Alphabet, and all those guys. Base release earnings came in much higher than expectations, so of course that's why Nasdaq has been doing so well. On the other hand, we had some energy giants like Exxon, Chevron come in with the worst earnings reports they've ever had, and unfortunately, that's kind of dragging the Dow and S&P right now. Update on the stimulus recovery package. Looks like obviously not. We're at the 31st, so it looks like we're going to go past the date of the extended refunds. The President Trump apparently did make an offer to temporarily extend it a bit while they negotiate, but the Democrats refuse it and want to basically use that as a leverage to pass a bigger bill as leveraging. So they didn't want to extend it in the hopes of trying to get a bigger bill passed through as a negotiation ploy here. So that's kind of where we're at with that. Unfortunately, the people are the ones who suffer here. So those who are on unemployment on with no reason for their own, no reason of their self, unfortunately, are the ones going to be suffering on this. So hopefully, we can all come together and try to work things out and try to get things moving and try to get some type of normal. See, that's what I think everybody wants, is go back to normalcy, and hopefully we can get that sooner than later. let's move ahead here to the bond market, see what we're doing here. As you can see, we've been kind of working our way upwards. We're currently up about 5 basis points. We did test a little bit lower earlier, but right now we're kind of this flat level at up 5 basis points. So pricing is about the same as what we saw yesterday. We didn't really have a huge change yesterday. I think we closed up about 9 or so basis points yesterday. Um, Maybe a little bit more. But anyways, pricing should be mortgage rates should remain unchanged from what we saw of so far this morning from what we saw yesterday. Yields did get pushed down further. It broke below those two floors of support. However, today it's trying to break back above it. We're seeing just below the 0.55 level here. Uh, so we'll have to kind of see if it's strong enough to get burst its way back up. It's been testing as it was, as you can see here. It's off of its earlier high, kind of resting at the first level of support, basically. All right, so that's pretty much the wrap of the day. Mortgage rates remain unchanged for the day so far. Of course, later in the day things could change. It could, heat up or pull back a bit. We'll have to wait and see. Um, these videos. I want to also mention that these videos are my personal views of everything. No, it does not represent anyone else or even the company I work with. Their views. These are just my own. But I am a loan officer. If you guys are looking to buy a refinance, I'd love to be able to speak with you guys. So please reach out on. I'll leave my personal email in the description below. You can reach out that way. We can talk a little bit about what you guys are looking to do. The company I work with is a national lender, so we can certainly help you out in majority of the states. We represent 48 of the 50 states. So again, we can help you with your pre-quals. We can help you out with the purchases. We got a lot to offer in those terms, as well as again with the refinances. So give me a shot. Give me a shot. All right, folks. You guys have a great rest of the day. Enjoy your week, and I'll look forward to see you guys on Monday's video. Bye bye.